Workers, Crazy Cambridge IGCSE Economics 0450. Welcome back to Crazy Cambridge. What is Crazy Cambridge about? Here I provide IGCSE and AS explanatory videos. IGCSE subjects include business, economics, accounting, biology, physics, math, and English. AS videos include business, economics, and accounting. I also provide tips for IGCSE and AS. So now let's look at the payments for labor. Now, labor, they have many types of payments, the way they're paid. First is time rate wage. Time rate wage is when wage is given based on the number of hours the employee has worked. Then piece rate is when wages are given based on the amount of output produced. Salary is a monthly payment made to workers, usually managers or office staff, usually in non-manual jobs. Performance-related pays are payments given to individual workers or teams of workers who have performed very well. You also have commission, which is going to salespeople for selling to a targeted number of customers, is a form of performance-related pay itself. Then, what affects an individual's choice of occupation? There are wage factors and non-wage factors. Wage factors are the wage conditions of a job or a firm, such as the pay rate. The prospect for performance-related pays and bonuses will be considered by the individual before he or she chooses a job. Non-wage factors are going to be like the number of hours of work, holiday entitlements, promotion, quality of working environment, job security, fringe benefits like payment of children's education, then training opportunities, pensions, entitlement. Then you have labor demand. This is the number of workers demanded by firms at a given wage rate. It is called derived demand, since the level of demand of a product will determine the industry's demand for labor. The higher the demand for a product, the more labor producers will demand. And this will increase the supply of the product as well. When the wage increases, the demand for labor contracts will also. Labor supply is the number of workers available and ready to work in an industry at a given wage rate. When the wage rate increases, the supply of labor will extend. Factors that cause a shift in the labor demand curve. So these factors, first one is consumer demand for goods and services. So the higher the demand for products, the higher the demand for labor. Productivity of labor is the more productive labor is, the more the demand for labor. Price and productivity of capital is a substitute resource for labor. If the price of capital were to lower and its productivity to rise, firms will demand more of capital and labor demand will fall. And here the labor demand curve will shift to the left. Non-wage employment costs are when wages are not the only cost to a firm of employing workers. Sometimes the employment tax, welfare insurance for each employer will have to be paid by the firm. If these costs increase, the firms will demand less labor. Factors that cause a shift in the labor supply curve. First is advantages of an occupation. The different advantages a job can offer to employers will affect the supply of labor. People will be willing only those type of jobs which satisfy the needs of them. Availability and quality of education and training. If quality training and education for a particular job, say pilots, is lacking, then the labor supply for it will be low. When new education and training institutes open, labor supply will rise. So labor supply curve will shift to the right. Demographic changes. The size and age structure of the population and economy can affect the labor supply. The labor supply curve will shift to the right when more people come into a country from outside, which means it is known as immigration, and when birth rate increases, so more young people will be available for work. Now, why do different jobs have different wages? So different abilities and qualifications. So when the job requires more skills and qualifications, it will have a high wage rate. The risk involved in the job. Risky jobs such as rescue operation teams will gain a higher wage rate for the risks they undertake. Unsociable hours. Jobs that require night shift and work at other unsociable hours are paid more. Lack of information about other jobs and wages. Sometimes people will work for less as they do not know of some jobs which are paying you higher. Labor immobility. The ease with which workers can move between different occupations. And labor mobility is if the labor mobility is high, workers will move to jobs with a higher pay. Labor immobility causes people to work at a low wage rate. Fringe benefits: jobs which offer a lot of fringe benefits have low wages, but sometimes the highest paid jobs are also given a lot of fringe benefits to attract skilled labor. Why do different wages differ between people doing the same job? Regional differences in labor demand and supply. If the demand in an area for accountants is very high, the wage rate for accountants will be high. Vice versa, if the uh, demand for accountants in a particular area is low, the wage rate will also be low. Similarly, if the high supply of accountants will if there is a high supply of accountants, the wages will be low as there are lots of employees to choose from. Fringe benefits: so some firms which pay a lot of fringe benefits will pay less wages, while firms in the same industry which pay less of fringe benefits will have higher wages. Discrimination: workers doing the same work may be discriminated by gender, race, religion, or age. Length of service: some firms provide extra pay for workers who have worked in the firm for a long time. Local pay agreements: some trade unions may agree a national wage rate for all their members, therefore all their members will get a higher wage rate than those who do the same job but are not in the trade union. Government labor policies: so the government's corporate tax policies can also influence the amount of wage firms will be willing to pay out. So this is the end of the video. I hope you found this video useful. This is part 1 of Workers. Stay tuned for part 2. Thank you for watching Crazy Cambridge.